Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what we think is likely to happen next. Now as I get into the video, if you find it useful and informative, smash that like button, I do appreciate that. If you're new to the channel then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will not miss another video update. If you haven't yet joined us in Discord though, guys, you aren't missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7, and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord? So let's jump right down into this. As you can kind of see, following on from the recent videos, we're kind of looking for this bearish move to the downside. We are finding ourselves in an interesting position. Obviously, we were talking about moving up to 29,000. We kind of have achieved this already, and we are seeing ourselves push up into an unnaturally high area. So we're going to review those areas and review the candlestick patterns and let you know my kind of thoughts and processes on what I think is likely to happen next. So let's jump down into the first chart, which is going to be our Elliott Wave theory side of things. We can see that we're overbought on the weekly, daily, 8-hour, 4-hour, and oversold on the hourly. So I'm not expecting terribly too much over the weekend. Low volumes and just retail participants. You might find that there's the occasional whale in and around and about, but for the most part, don't expect massive swings on the weekend at the moment. Now we can see that we did overextend slightly above and beyond our 1 to 1.236 yesterday. We also extended above the 88.2% typical retracement of wave 2, but we still remain lower than 29,969, which is our local swing high, and 30,036, which is the swing high from previous. These are structural points that allow us to know that we're still in our bearish structure, as we have failed to push up higher than those. So although the price has pushed up here, there are some obvious takeaways that we need to kind of consider. So let's jump down into these. Let's go ahead and I'm going to leave this one just over here for a second. Just want to move it out of the way so we can take a look at those candlesticks. Now, the first thing that we need to acknowledge, if I grab a parallel channel here, is that we are finding ourselves up here, and you can see there's a couple of wicks that are slightly higher than the others. And if I pull this down, what we are doing is higher highs and higher lows, and these do have a tendency to want to break on it down. There's a couple of different ways of looking at this. If I pull this over to here and I pull this one to here, we can see that we're kind of testing this. Now, it's still possible that we test those higher ranges, but for the most part, this is a pretty bearish place to be. Okay, so let's go ahead and remove our channel and start talking about the structures that are we finding within here. We can see that we have a possibility here that we have a zigzag pattern right here. Okay, so it would be a zigzag like this. Okay, and we then move down and then we start to move on up. And again, we have a potential zigzag pattern right in here as well. Okay, so this being a zigzag and ABC being the technical requirements of a zigzag pattern. This essentially is a double zigzag, which would be a W, X, and Y pattern. Okay, so right in here, it looks like everything is kind of done and, you know, we can start to think about the move to the downside. Okay, I'm still going to be a little bit cautious because, you know, we are oversold on our hourly. Not that I would expect a move to the upside, but, you know, we can kind of see it in there. So essentially, it does look like this correction has finished. It's a slightly higher than our typical kind of wave 2 positioning. And why a wave 2? A wave 2 because I do see ourselves in a nested position here. We have 5 coming down. We had 3 coming up. Then we had another 5 coming down. 3 coming up and another 5 coming down. And because these haven't come down lower than their origin levels, we have to kind of consider one big thing, and that is that we have ourselves nested 5-wave structures. So I'm still looking at this potential move right here. If I grab this low point and this high point, I still need to sort out my fibs from my mistake yesterday. We can see that there's going to be a potential move just down a little bit deeper here towards our 1.618, which is this blue line. I will make these all yellow at some point and make it a little bit more easy to see. I'm just going to approximately put this one on here, and what I'll do is I'll just label this one up a 1.618. There we go. Okay, so this is the expectation right here. Okay, we've got a couple of these because there's this one as well. Okay, just pull this over as our part of our bigger structure. So let me show you what I mean is going on here. Okay, so what we have is we have a theoretical wave 1, wave 2. If we come down to this level at 26,125, that's a wave 3. We come up for a wave 4, we come down into a wave 5. And that 5th wave movement would have to hit fact, I'll just pull that down a little bit further. We'd have to hit our 1.618 here, because what that'll allow us to do is then take a look at this as a wave 1. Up here is a wave 2. All of this is our wave 3. We bounce up into a wave 4, and we come down into a wave 5. That would then trigger this wave 3 situation over here, okay, which would then see a bounce upwards and then a wave 5 situation. So you can start to see that we have a nested position starting to emerge, and you can see there's 5 waves inside there of the wave 1. There's a 5 wave inside the wave 1 there. There's a 5 wave inside the wave 1 there, and so forth. So without kind of getting overly too complicated, I will remove these off, but so you get an idea. We're looking for a big swing in the market to the downside, and we're seeing these nested positions. Now, this is just one out of a couple of different possibilities. This is the one I'm seeing as the most probable at the moment, but you know, it could change and evolve into a less sinister move, and we just find ourselves doing some zigzag patterns, and that's essentially all that's going on. So for example, we could see ourselves with an A, B, C structure here like that, and then that allows us to then basically see that as just a corrective pattern, and then we have another move like this at a later date, and we kind of see ourselves kind of moving down in just zigzags, right? Possible, but would require us to see different formations than we are currently. So I'm going to park that idea as less probable for now, and we're just going to focus in on these 1.618 targets for nested 5-wave structures. So ultimately, we have higher highs, higher lows, with tendency to break on down. We can see this time and time again, and we have ourselves these 5-wave structures. We're overbought on the weekly, daily, 8-hour, 4-hour, oversold on the hourly, but I'm not too concerned about those micro movements on the hourly chart, because I think the macros are pretty clear that we need to be moving down. Now, from a smart money concepts point of view, again, we can see fair value gaps not yet filled, and some fair value gaps that were perfectly filled. Okay, so again, we're seeing the manipulation, we're seeing the price push to the upside, and we're seeing those gaps get filled out pretty quickly. Okay, so for example, there was one right up here, pull that in, and we filled it very, very quickly. Okay, so we're still looking very good here for this. We are in a bearish state of play still. That's not yet broken. We haven't changed our characterization from bearish to bullish on our hourly chart for smart money concepts. We still have our strong high and weak low. We are finding support at the moment just here on our 250 EMA levels. But nothing terribly too unusual about that. There's a little bit of buying pocket right here. There's buying pocket here and a buying pocket here. Those are quite interesting. Selling pressure is obviously right up in this premium range. So again, we don't want to be seeing price, or you want to see people FOMOing in right up where you're paying premium pricing. You don't want to see that necessarily. But we are, of course, in this bearish state of play. Higher highs, higher lows. We can see those things. So we are looking at losing the 50 EMA, and we're probably going to have to look to lose the 200 EMA. Do expect it to kind of bounce around a little bit around the equilibrium, but ultimately I would still be expecting to come down into these lows and set a new local low, because this is a weak low point at the moment, and I do suspect that we have to go down deeper than what we currently have in order for us to basically facilitate the structures that have emerged out here. So all in all, it's not looking overly promising. We can see that we have some interesting kind of structures overall, but for the most part, I would say we are in one big bull trap, or flag of some kind, like a bear flag, and we can see this by the higher highs and higher lows. Overall, not looking overly positive when we start to zoom out of this thing. So as much as we like to see the green in the market, just prepare ourselves. I'm not expecting that green to last terribly too much longer. I know I've been saying that for a while, because I honestly do genuinely believe that we are looking at a bear market rally on a macro level, and these micro movements are literally just grabbing liquidity. We're seeing price get pushed in both directions, and we're seeing retail investors losing whilst the price goes up and price goes down. Just make sure that you understand that ultimately there's going to be a big rug pull at some point, as we do look for those macro lows to start to get hit, and those fair value gaps on those larger timeframes also start to get filled out. Okay, so that's kind of my position on it. Let me know what yours is down in the comments below. Just bear in mind, I'm not a financial advisor. I can't give you financial advice. All I can do is give you my thoughts and opinions on the data as I see it personally. I'm going to leave the video right there. If you found it useful, smash the like button. I do appreciate that. If you're new to the channel, then why not subscribe? Don't forget to join us down in Discord. And if you haven't yet signed up to BitGet, why not check that out? Linked in the description below. It's a fantastic platform that I'm doing all my spot and leverage trading on. I don't think you would regret checking it out. Fantastic offers down using the affiliate link in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.